I've, I, of course, always like to start with a summary of what I saw happening with the market this week. Really amazing week altogether. And let me show you a chart here just for starters. So here's the year-to-date S&P 500 chart, and Monday, Tuesday, Wednesday were up. Wednesday was really up. Thursday we took it all back, and today we're kind of down to near the lows of where, at least this morning anyway, near the lows of what we hit back on Monday morning. And so one of the things you might notice if you look closely at this chart is that we're kind of challenging the same low point, more or less, around 4,100-ish on the S&P 500. And so on 24th of February, there's a low point there. That was the invasion date of, for Ukraine. And in the morning, we hit a low there. And then Monday, and then today. And so we're hitting what's called support. That just means that there's people willing to buy at that level. So when the price gets there, they come in and they buy, and the price jumps back up. But one of the problems you'll see is when you keep hitting support over and over again, you can actually dry up that support. I wouldn't be surprised at all to see that happen and have us come down. Next level support's about 5% lower than where we are right now, and so that is part of the process. More or less, what we have happening here is just this giant battle between opposing forces. One group that believes that things are going to be okay and they want to buy at these lower dips, and another group that believes that we're going to head into a recession and need to sell when things run up and such too. So with that in mind, really this week one of the biggest pieces was what was happening with the Federal Reserve. So they met this week. The chairman of the Federal Reserve came out, Chairman Powell, and spoke, talked to the American people, which is kind of interesting to watch. Just really about inflation and how they're going to try to fight inflation. And then there was a question and answer session that happened. And I thought the questions were really good this week, this particular time. And of course, Chairman Powell does a really good job of answering those questions. So the overall summary was that they just raised rates another 0.5%. He talked about raising rates, another 0.5% for the next two meetings, June and July meeting. And that they were going to start to sell some of the assets that they had on their balance sheet starting June 1st. So, as you probably recall, the Federal Reserve was buying Treasury bonds and buying mortgage bonds to create liquidity. And now they have about $9 trillion worth of those bonds on their balance sheet. And so now they're going to start to sell them or let them expire and fall off, which would create a more restrictive monetary environment, right? So that's what they were doing. And then in the commentary, he was saying that he felt that the economy was very strong, the job market was strong, the consumer households were very, very sound right now, and businesses were very sound financially and spending and all these different things that they're looking at. And they felt that they could push down on the economy by raising interest rates and letting these bonds fall off the balance sheet, and the economy would not kick into a recession. They should be able to push down, get inflation down without causing a recession, right? And so that it was very positive. The market moved up very strongly on that day, over a little about almost 3% basically for the S&P 500, for example. And one of the big catalysts was that they basically said that they weren't going to do a 0.75% increase at these future meetings. It wasn't on the table at this point in time. Obviously, things can change, and we'll see what happens there. But that's what really seemed to get things rolling on that particular day. So that was all good. It seemed very clear. I do like the clarity that we're starting to see. We now know what's going to happen with the balance sheet and all these things. But the question and answer period was excellent, and there was one question I thought was very interesting, and that was that Powell had been talking about trying to lower the demand to meet the supply to kind of create this balance that would then create a lower inflationary environment. And so the question was, what happens if the supply doesn't come up or even falls down further? For example, because China, which is kind of a huge part of our supply chain, continues to lock down, or the Ukraine war continues to create problems in the supply chain. What happens with that? If the supply starts to come down or doesn't meet you, are you still going to push demand and push interest rates basically up to make that match up with supply? And if you do that, will that cause a recession? He didn't really answer it. It was sort of I thought it was sort of like a political answer. The reason you can't really answer that is because it's probably yes. And that's the one big danger right now is that, supply doesn't come to meet them if you're going to decrease demand, the supply isn't coming up to meet, then that could be difficult to deal with. And more importantly, the Federal Reserve doesn't really influence supply. There's outside influences. They can lower people's wants and demands, but they can't really move the supply side. So it's very interesting. They spent a lot of time talking about jobs and job openings as being a big problem. There's 11.6 million jobs open right now, which is an all-time record. Again, seems like every time they report that number is at a new high. And what happens then is what's called wage cycle inflation. So, so many open jobs, nobody's taking those jobs. They're desperate to get the people in, so they start paying more, offering more on these new jobs. Of course, that maybe works. People come into work, and then the companies have to charge more because they're paying more for the labor. And of course, now we're all out purchasing these things, and those things get more expensive, and the labor comes back and says, hey, we need more money. And it's this upward cycle. It's what happened in the 1970s. So what they're really trying to do is drive down the number of open jobs, ultimately by slowing down the economy. So, if there's 400 people that want to fly in an airplane, and the airline can't get pilots, and they can only get one pilot that can fly 200 people, that's a problem. So they can't get two pilots, which is what they need. They only get one. And so what are they going to do? Well, they're going to raise the prices on those plane tickets until there's only 200 people that really want to pay that much for a flight. And so you have to then try to drive down demand, right? So maybe there's only 300 people or 200 people that actually want to fly because the economic situation isn't as good as it used to be. And you also need to get that, supply chain up, which in that case means more pilots, right? And so that's the big issue. It's really interesting to see how this is going to play out as far as that goes. So I think, it's going to take some time here to figure out who's right in this particular battle. Are we going to have a scenario where supply does increase, the demand dissipates enough, we get back into a better band for inflation without kicking us into a recession? Or is the Federal Reserve going to have to push so hard that the only way they can get inflation down is by causing a recession? It's very important to the stock market. The average rate of return in a downturn without a recession is 15%, which is right around where we are now. The average rate of return in a recessionary situation is negative 36%. So this is where we're at right now, just trying to figure out, what's going to happen here, and something we're going to be watching. I will say, I think it's much more important right now to watch the supply side. We have a very clear picture of what's going to happen, I think, on the Federal Reserve's path, right? And that can change, but at least they spelled it out very well. What we don't have a clear picture of is what's going to happen on the supply side. How's China going to deal with these lockdowns? What's going to happen in Russia, Ukraine, and other situations that might come at us. So, looking at shipping and shipping rates and trucking rates and all these things. And then also looking at whether there's a spread. We've been buying goods mostly. We haven't been doing services as much. Does services start to pick up, and does that start to allow some, lower prices, or at least less gains in prices on goods? And so, those are things that we want to watch for as well. So there is one other key kind of interesting piece here. This is a American Association of Individual Investors, AAII, does a survey on a regular basis since 1987, and they ask the people, how many of you think the market is going to be higher in 6 months? And so if you go back to 1987, there's only been 4 other times where the number of people that said they thought it was going to be higher in 6 months was less than 20%. So the last 2 weeks, we've had less than 20%, just like these other 4 situations. So only 5 times since 1987 has this happened. And I know this seems kind of weird if you think about it. Everybody thinks the market is going to go down. Maybe I shouldn't be in the market. Well, that's true to a certain point until everybody gets onto one side in too extreme of a situation, because it only leaves the buyers to come back in and move. And if you look what happened in these other four situations, it was 1988, two times in 1990, and one time in 2016. If you look out to the 1 year chart here, 100% of the time the market was up a year later. The average rate of return was much higher than the average rate of return for the S&P, was at 23.51%. And so these scenarios are something to watch for. The other thing is we've never had 3 weeks in a row below 20%. So I think next week will be interesting to see what happens with this particular survey as far as that goes. But keep in mind that, if you're nervous, lots of people are nervous, and sometimes enough people get nervous, that's when it turns the other way and starts to come back up. So let's see what happens. I do feel like we'll probably have some continuation to the downside, but we might start to see some pop to the upside because there's really nobody left to sell at some point in time. So anyway, that's what's happening with the market so far this week, in my opinion. It's still a time to be cautious, but also a time to kind of hang in there and really see what's going to play out and how this is going to work as far as that goes. Mainly because once things do start moving, they can go really, really fast to the upside. I mean, we saw just a super powerful move on Wednesday, for example. So if you're going to, sell everything and then try to jump back in, you could easily miss out on some of these really big up days if they happen. So better to have a well-diversified portfolio, hang in there, wait for things to kind of play out and settle out, because everybody's running around like they know what's going to happen, but we don't. So we have to kind of wait and see. So anyway, look forward to talking to you next week for what I see then. Thank you very much.